All right, what's going on, guys? Terry James, your mortgage guy, coming to you again, as I do, and try and bring you some great information. Today, what I want to talk about is probably, if not the number one commonly asked question I get as a mortgage loan officer when you are starting the home buying process or even don't know where to begin. The question is always, how do I start? What do I need to do, Terry, to start the home buying process? And so I just want to kind of share some information and address, for those of you that are wondering, if you're looking to buy a home, how do you start? So the first thing you want to do is, it does begin with a application. And so the reason why that's so important, I'm going to break down exactly why you want to apply. If you are thinking about buying a home, you want to find a good mortgage lender, you want to find a good mortgage loan officer, and you want to put in a application as soon as you can. Okay? And so it's so important that we start this, and I'll share with you each step, what's involved in the application, and the reason why this is important. Okay? So yes, the first step as you start the application process, the reason why you want to do this as soon as possible is because you need to understand, as a lender, the items that we're going to look for, or even on calculating your income. All these things start with the application. Because many people, sometimes, you will think you make a certain amount, and come to find out that once it's calculated, it's a little bit lower, or it could go in the other way where you think you make less. And when we calculate the income as a loan officer, as a mortgage lender, you actually have more income than you thought, which is a good thing. But what's important about this and getting in your application is, because until we have an application, there's nothing a mortgage loan officer can really tell you. There's no way for you to really know what your buying power is, even what your credit score is going to come back as, because you're looking at, Credit Karma sometimes. And as we know, Credit Karma is not accurate when it comes to a score that the mortgage officer is going to use, that the mortgage lender uses. And that's because they use a different scoring model. I'll go into that much later. I might have to do another video on that. But so therefore, when you start the process, it's very important that you start looking and get your application in. Number one is because of credit. That's paramount, because when you begin to evaluate and you're looking to buy a home, knowing what the mortgage lender is going to pull as your credit score is very important. So I know that when you start that, you say, oh, well, I don't want everyone looking at my credit. I don't want my credit pulls. And you may say, oh, well, it's going to lower your score. Listen, things have changed since the 80s and 90s, okay? Trust me, from years ago. So they are no longer docking you, or you're not losing your score. Your score isn't dropping dramatically because you allow multiple lenders or mortgage lenders to pull your score. And so I say multiple because you should be shopping around. If you're starting to look for a home, then you want to shop around and make sure you're going to find not only the best rate, but you want to find the best loan officer. So it's not just about the rate, it's about finding the best loan officer that's going to see your situation and be able to close the deal for you. So the reason why it's different than, when it was in previous years is the Consumer Act, and a lot of things have changed with consumers being allowed to shop around for your rate. So, years ago, you weren't able to shop. Once you had a credit pull, it did, hurt your credit dramatically, 10, 15, 20 points just by having a credit pull. It's no longer like that anymore. And so I'm going to put the link in, and you can even see for yourself from Experian's website that shows that they allow you to shop now. Now, I'm going to define what shopping is and what the credit bureaus refer to shopping, okay, and how that affects your score. So as a consumer now, when you want to buy a home and you're looking to shop, you can allow multiple lenders within a time period to shop. Now, Experian released an article, and basically what they advised, and what they said is that they allow a 14-day window to count pretty much as one credit pull in their mind. And what that means and why is that so important? So when you go to shop and you say, okay, hey, credit lender A, go ahead and pull my credit. Well, within the next 14 days, if you allow 14, 20 lenders, mortgage lenders, to pull your credit, the credit bureaus are going to look at that as one basically credit pull. Now, you are going to have other hard inquiries, okay? So we got to understand the difference there. A hard inquiry meaning that, yes, a lender pulled a hard credit report from you, or a creditor pulled a hard credit report. It's going to go on your credit report as a inquiry, so a hard inquiry. Those typically fall off in about 12 months. But the big thing about shopping is the credit bureaus say that if you shop and you have a mortgage lender and you pull 14 of them, and let's say within a 14-day window, what they're saying is they're not going to dock you points. So the most that you can lose on your points typically is going to be a few points on your credit score. So because they're allowing you to shop within a certain period, as long as you're looking within the same industry. Now that's really important, because what they monitor and what makes a difference is when you go to shop. For example, if you're shopping for a mortgage, you're going to an auto loan, and then you end up at Home Depot, Macy's, and all these other credit companies. So when you start having multiple of different variety of industries, that's when your credit score is going to take a bigger hit. Okay, so that's why, just getting back to the whole credit thing, is really important that as a lender, if you're going to buy a home, you want to have your credit pulled by a mortgage lender. You want them to review your credit. And the other reason why this is important is because there's oftentimes things that can be on your credit that you may not think is going to affect you. But as a mortgage lender, as a loan, depending on the loan product, there are other things that may be on your credit report that may affect you, and you have to work through. So the best thing about it is you want to get ahead of it now. So if you're looking to buy in 2 years, I would say go ahead, let a mortgage loan officer review your credit to see what's on there. Because things that you may not think affects you, whether it's a BK, whether it's for instance, like a collection account, something like that. So these are the things that can affect us, and you may not even know what's on the credit. So that's why step one is always getting in your application. What else is involved with the mortgage application? You've lived typically for the last 2 years. They need to see the history of that. The most important thing is now going to be your employment. So, of course, we know that income is a big part of you getting approved for a home loan. So if you're going to buy a home, the lender is going to look at the last 2 years of employment history. That doesn't necessarily mean it has to be at the same company or the same job or the same industry, but it is going to be the last 2 years of employment history. Okay. Now, the reason why that's so important is because, you could be at your job now for 6 months, and let's say you just jumped into a whole new field. The reason why you want to get in your application is because as a loan officer reviews your employment history, we can start to address certain items that might need to be addressed, such as maybe you change industries. That's going to be important, because if you change industries, maybe you're not going to be able to get approved for 6 months. So now you know what your timeline is. Okay. So these are all the different things that affect, and the reason why you have to get it in. Some people say, oh, I already know what I make. I know my debt to income ratio. But there's other factors when you start filling out your employment history that we need to know as a mortgage lender that's going to affect you. So it's really important. The other thing, when you fill in your application, the other thing that's telling us as a loan officer, as a lender, is we learn the type of income you have. And so that is huge. It's huge. It's very important, because the type of income you have, such as, are you salary? Are you commission? Are you 1099? Are you self-employed? So yes, you could be making $10,000 a month, but depending on your bonus, depending on if you're getting paid overtime, how long have you gotten paid overtime? There's a lot of factors in there where we may not be able to give you all the income that you actually make, because depending on the income type. So that's why it's important to start with the application. That's the first thing we've got to do. It starts with the application. Even getting into Social Security income, there are things that can work to your favor depending on, sometimes we can gross the income up. So if you're receiving Social Security income, it can be grossed up in some situations. Even retirement income can be looked at differently. So there's a lot of factors that once you fill out the application, we now know, and we can start to work on those things. The other thing that's going to be on the application, and the reason why it's important to get the application in, is we're going to talk about assets. So in any mortgage loan application, these are going to be your top things: credit, income, and assets. Okay, so with the assets, it's going to be very important because, of course, how can you buy a home without any assets? So the reason why the assets are important, the reason why it's important for you to fill out the application, so that because once we comb through, we're going to ask you some questions on the assets. So if you say, okay, well, I already have $15,000 for your deposit, for your down payment and closing. That's great. Once we get the assets, for example, once you apply, you're typically going to be asked to upload some statements. We review those statements because there may be large deposits that can't be tracked. If you're depositing cash, that can be an issue. So therefore, you may have $15,000, but if you have $10,000 in cash deposits, we can't use the $10,000 deposits in cash. So therefore, that can affect now your home buying. Like, okay, you think you're ready, we're there, but you're not now. Now we have to replace that $10,000 of cash deposits because we can't track it. So it's so important that these are all the things that why you need to get in the application if you're going to buy a home loan, if you're going to buy a home to get approved for a home loan. So there's a lot of things that affect you that you may not know, but that's our job as a lender and as a loan officer to know and review these things to make you prepared. Okay. So these are, just some of the things that the reason why it's important to start with your application, to get the application in as soon as possible. A good time frame, I would say that if you're really looking at purchasing a home in the next year, I would say that's the time to start your application. Find a loan officer you can work with and start your application process. And, since you do have that window of time to shop and let multiple lenders and loan officers pull your credit without it really affecting you, what I would say, here's the most important thing about that. What I would say is you're not going to be talking to the loan officer because until you get closer, you're not going to know what your rates are. So it's hard to really shop for the best deal at that point, at the initial stage. What you're really looking for, okay, as you shop around for different loan officers, what you're really looking for is you're judging the loan officer, okay, because that's going to be key to your transaction and you getting the deal done. Is your loan officer and your realtor are the two most important people in your home buying process. They can either make your deal, they can break your deal, or they can make it the worst thing possible you ever been through. So that's why it's important that as you're talking to different loan officers, if you didn't get a recommendation, I've talked about this before, the first step in getting a loan officer is first talk to friends, family who had a good experience that can refer you to one. Same thing with the realtor. If you don't have that and you begin to look around and you're selecting Google or wherever you're getting your sources from, if you search, the thing you want to look for is responsiveness and how well they are able to address your questions and concerns. Okay. So if you're and this is why this is important, is because as you go through the transaction, there's going to be other things that come up. There's going to be questions. There's a lot to this process that comes up once you start the process. Once you find a home and you're in contract, I'll talk about that later. I've already have some other videos. But once you start that process, there's other things that come up. Initially, if you talk with a loan officer and initially they're not responsive, guess what? They're not going to be responsive later. So it's very important to make sure, because when your realtor needs to know something or the seller agent needs to know something and your loan officer is not answering the phone, not replying to emails, that can be a big problem for you. So you're not judging, the company. You're really looking at, when you're going around, you're looking at the loan officer. So, where do you begin your process? It's really simple. It all starts with the application. A lot of people are putting it off, but I want to tell you right now, if you're going to buy a home, you have to get your application in. You have to let a lender pull your credit and start to fill in your employment income, your employment history, your income, so we know what type we're dealing with. And then we begin that process of even reviewing assets. Okay, because all of this is about setting you up for success. If you want a smooth transaction, start early, get everything in, and be transparent with your loan officer. All right, so until next time, take care.